estate, shares, and credits in general in the name of the deceased or deceased located abroad at the time of death in order to understand where and if it will be necessary to carry out an inheritance tax and the process in Italy or elsewhere. So first of all, what really matters is where the deceased is being considered tax resident at the time of death, as it could considerably change the whole tax treatment in Italy and in other countries. This is also necessary to identify where the assets are located and in any particular circumstances. So first step, let's try to verify where the deceased was considered to have his tax residence, and this definition is usually taken from local regulations according to principles and assumptions provided by his country and also international tax agreements. And the second step, from the Italian side, please make a list of any property and real rights in Italy within the Italian territory. As a general rule, it must be considered that under the Italian law, all assets and rights existing in Italy in the Italian territory as defined by Law 346 of 1990 must be considered as part of the inheritance assets and therefore also more likely taxed. So, taking a step back, regarding existing assets abroad, it will be necessary to get into the deep analysis of the dual taxation agreements, what those countries agreed on, and for each kind of asset, for each type of asset, in addition of the assumptions that national regulations may apply based on different nature and type of assets. And after that, we can jump on the Italian table. All real estate, houses, apartments, which are registered in the public register of an Italian law are considered to exist in the Italian territory. The shares, equity investments, companies, businesses that have their registered office, permanent establishment, or administrative office, or main center of activity or core business in Italy are part of the list. Bonds issued by Italian government or by entities fiscally resident in the Italian territory are also included. Credits, bank accounts, checks issued by a payer who is physically resident in the territory of the country, as well as credits which, despite being related to an individual who is not fiscally resident, are guaranteed by assets existing in Italy. These are part of the list. So once again, it's very important to clarify and understand carefully what countries provided for avoiding the dual taxation, because the final goal is to pay the total as provided by the law. Nothing more, nothing less. Do you agree with me?